in the beginning, and as Jesse Livermore once said, arguably the greatest trader ever, he said, be right and sit tight. He also said that the best trades, and by trade I mean it can be a very long-term trade. It's not like a day trade, but he said that the best trades are not taken on by the smartest or cleverest people. They're taken on by the most patient, and I think that's still paramount in this precious metals bull market.
What's going on, everyone? Welcome back to the channel. So today we're diving into a video from Maniko64, and he just dropped some absolutely critical insights about what's happening in the precious metals market right now. He's breaking down why the recent volatility in gold and silver was nothing but paper market manipulation. And more importantly, he's revealing a massive $12 billion government announcement that almost nobody is paying attention to. This could completely change the trajectory of silver in 2025. You're going to want to stick around for this entire breakdown because the data he presents is honestly eye-opening. And I'm going to add some extra context that makes this even more interesting. Real quick, drop a comment and let me know where you're watching from. I love seeing where everyone in this community is tuning in from around the world. All right, let's jump straight into it.
President Trump has realized that, and he's been signing executive orders ever since he took power last year to do with critical minerals, to do with mining and all of that. The world is turning away slowly but surely from financialization into hard assets. Tuesday, February 3rd, 2026, Maneko64, home of alternative economics and contrarian views. Well, today we're going to talk about physical supply because that's the underlying reason why silver has done so well in the last 12 months or 13 months. And yes, the volatility we've seen, not just in gold, but especially in silver these last few days, was just that volatility, a lot of noise, a lot of big players trying to defend their positions in the paper market. Yes, I was reading, someone noted that the volume the other day was so huge that it corresponded to like 2 times the production of silver in 1 year, right? And how do they do that? Well, the contract size for the futures is 5,000 ounces. So you can trade as much as you want, especially if you have deep pockets like the bullion banks. But we're going to look at a very important announcement from the Trump administration, from the White House, to do with critical minerals, because while unfortunately a lot of people probably got shaken off their silver and gold positions these last few days, especially people who have used leverage to actually not buy real gold and silver, but to buy instruments like ETFs, like futures, like options. Yes, I really think it's a silly thing to do in this massive bull market in gold and silver. We're just beginning, and I'm going to show you some charts, that long-term charts that will show you that, yeah, we're in the beginning. And as Jesse Livermore once said, arguably the greatest trader ever, he said, be right and sit tight. He also said that the best trades, and by trade I mean it can be a very long-term trade. It's not like a day trade. But he said that the best trades are not taken on by the smartest or cleverest people. They're taken on by the most patient. And I think that's still paramount in this precious metals bull market. So we're going to look at that, some charts. We're going to look at what gold and silver are doing this morning here. It's 7:45 a.m. London time. But before I do, I'd like to thank all of you for your interest in the channel, for your kind words. Yes, I try to read the comment section once in a while, and I'll keep trying.
This is what everyone needs to understand about precious metals right now. When Jesse Livermore said, "Be right and sit tight," that wasn't just a catchy phrase. That was the philosophy that made him one of the greatest traders in history, and it matters more than ever in 2025. Look at the recent volatility. Silver got hammered, gold took a hit, people panic sold everywhere. But the volume during that sell-off was insane. 2 times the annual global silver production in a single day. That's not organic retail selling. That's paper market manipulation that should terrify anyone holding futures instead of physical metal. This is why patience beats intelligence in this game. Smart analysts got shaken out because they traded on leverage, ETFs, options. Meanwhile, patient holders of physical metal didn't even blink. When you understand the fundamentals driving this bull market, short-term volatility becomes irrelevant noise. Back in 2004, the Financial Times said gold was finished and pointless to hold. Gold was at $400. Today, we're pushing $5,000. And they're doing it again right now, calling this a retail bubble. But anyone watching COMEX vol data, Shanghai withdrawals, LBMA deliveries, we know this is institutional accumulation on a scale we haven't seen since the 1970s.
Read the FT, read the Wall Street Journal, read Bloomberg at your own peril. Yeah. And I noticed, though, that, yes, the bullion banks were heavily involved in the attack, paper attack on silver and gold in the last few days. But I see that JP Morgan's still calling for like $6,000 or $6,500 gold before the end of this year. And I think they're going to be wrong in that they're going to be too conservative on their price target. Yes, more importantly, and we've been telling you guys this here on the channel, and also other people in the precious metals like space, sound money space, the alternative space, the conspiracy theory space, right? There's a war for commodities now, and we covered that here on the channel like almost 4 years ago, because there's a guy actually from within the mainstream who worked for the New York Fed, who worked for Credit Suisse, Zoltan Pozsar, very clever analyst, who was telling us that with BRICS, with the world breaking up, with the war in the Ukraine, commodities are going to become a hot item. And commodities, of course, are really important as well, as we're starting to see the critical minerals, the rare earths, for the technologies that are coming, not just AI, but electrification and all that. You need these rare minerals, rare earths, whatever you want to call it. And for the past 30 years or so with globalization, the West has dropped the ball. They've allowed China to really be the dominant force, not just in producing these rare earths, but also processing them into the finished goods. But so now the U.S. has realized that. President Trump has realized that. And he's been signing executive orders ever since he took power last year to do with critical minerals, to do with mining and all of that. The world is turning away slowly but surely from financialization into hard assets. So this was announced, here it is, announced yesterday. U.S. to launch a $12 billion critical minerals stockpile to counter China's dominance. There you go, China's dominance. U.S. Export-Import Bank will provide $10 billion in debt financing for effort named Project Vault. They mention here all the metals like copper, what else? Copper, rare earths, lithium, and so on. They don't mention silver, but if you go back to this article on November 6th, it says U.S. adds silver and copper to critical minerals list. Yes, why don't they ever mention silver that much? Well, because silver is really important strategic metal, and it's becoming a monetary metal as well. So there you go.
Here's where it gets really interesting. The $12 billion critical minerals stockpile announcement isn't just about national security. It's about the United States finally waking up to the fact that they lost the commodity wars. China doesn't just mine more rare earths than everyone else. They control the processing. They control the entire supply chain. With the Export-Import Bank providing $10 billion in financing for mining projects, we're seeing a fundamental shift in how Western governments view hard assets versus financialization. Zoltan Pozsar called this years ago. The breakdown of globalization would trigger a commodity supercycle, and he was absolutely right. But here's what most people missed. They listed copper, lithium, rare earths. They did not mention silver in the headline. Why? Because silver was quietly added to the critical minerals list back in November. Silver is both a strategic industrial metal and it's becoming a monetary metal again. That dual demand is something we haven't seen since the 1960s. The US government needs silver for defense, solar panels, EV infrastructure, AI data centers. And the supply deficit in 2025 is projected to be even worse than 2024. This is why the market rebounds so violently after these sell-offs. You sell at 75 thinking you're being smart, then 48 hours later it's back at 87 and climbing.
We're going to look at some charts now to show you a quarterly chart of gold going back, to when it was fixed at 35, all the way back to the 40s. And you can see here that the breakout we had back in, was really in January of last year, we broke out this trend line that I have here. And it's taken off since then. Yes, the correction we've seen recently doesn't even show on the chart. And if you look at the bull market from 2001 to 2011, that was a much longer bull market than the bull market we've had so far after the break of this line. And look at the bull market in the 70s. So what I'm trying to say is we're just in the beginning. So let's move over to silver. Silver is the same thing. Silver is just taken off a little later than gold. It's traded differently, of course. It's been suppressed for a lot longer. Yeah, but here's the quarterly chart. Yes, there's still a lot of room for silver to, for that chart to look a little more bullish, but it's still bullish. And if you look at what it did in the 70s and the breakout that we have now, we're still only in the beginning. We could go to a lot higher levels in silver. And yes, a lot of people are going to come lately. They're going to be shaken off. They'll never get into silver again. and but you will be like holding like a rock. That's what we need to be. We need to be like the Rock of Gibraltar and let the market, the waves hit us and not react. The waves, of course, is the volatility. What else have we got? Yes, I wanted to show this chart as well. I've been looking at this because even though the silver miners have done well, they've underperformed the bullion. And if you look at SIL, which is a silver miner ETF versus silver, we're at very low levels, and recently we hit the lowest level ever since this ETF has been published. Yes, that was January 26th, so about a week ago. And even Tavi Costa, who I will have on the channel, he noticed this as well, and he posted this about this ratio. Let's look at where the markets are then. It's 8 a.m. London time. So we've got gold actually up $256. Yes, it's at 49.15. The high's been 49.34. I guess 5,000 really is the key now. If we can get back above that level, we'll have to wait and see. There's still a lot of water to go under the bridge today. The U.S. markets haven't really opened yet. Silver is at 86.50. It's up $7, almost 10%. I wonder if they're gonna use the circuit breakers to stop silver trading if it goes up more than 10%. They probably will. Well, the high's been 87, and the rest of the markets actually are very quiet. So like the stock market indices aren't really doing much, and also the currencies, they're a little stronger versus the dollar, but not much to write home about.
The charts here are absolutely critical for understanding where we are in this cycle. That quarterly gold chart, going back to when it was fixed at $35 in the 1940s, when you zoom out to that time frame, the recent correction doesn't even register. It's literally invisible. When you compare the current bull market to the 2001 to 2011 run, we're still in the early stages. That previous bull market lasted a full decade. We've only been in this confirmed uptrend since January 2024. The 1970s bull market went even longer with even more explosive gains. But here's something really interesting. The silver miner ETF to physical silver ratio just hit its lowest level ever on January 26th. What does that mean? Silver mining stocks are more undervalued relative to the metal than they've ever been. When miners get this disconnected from the underlying commodity, the snapback is historically violent and profitable. In the London session, gold was up $256, testing 5,000. Silver was up $7, almost 10% in a single session, hitting 86.50. And the question is, will they trigger circuit breakers if silver pushes past 10% gains? We've seen trading halts on the downside, but somehow never on the upside. Being like the Rock of Gibraltar while volatility crashes against you, that's the only strategy that works in a genuine bull market. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.